Morning, Steve here in Chicago with the morning grain comments. It's Veterans Day, so we thank those who served and sacrificed for our country. I'm also wearing this because it's pretty cold. The drive into Chicago today was pretty slippery. We're supposed to get down some record low temperatures in the next 2 days. Then hopefully temperatures warm up back closer to normal. Still trying to figure out what's going to happen this winter across the Midwest. Some people think that we're going to have a very cold and dry winter. Other people think that we're going to have kind of a more seasonal temperatures but a lot of snow. So we'll try to figure that one out. We'll know by April 1st for sure what kind of winter we had. Overnight, we've got prices lower in the grain, some follow-through selling from USDA's Friday's report. We're also at some unrest in Hong Kong, and this week we start the impeachment hearings in Washington. So all these things should offer some pressure in the marketplace. We'll see if any of the data that comes out this week on U.S. economy is supportive. We do note that some of the emerging countries' data is supportive, but we're just wondering if the drag in China could offer some resistance to the world economy. Over the last 10 to 15 years, China has bought 50% of the global raw materials, and so that's an important stat to kind of watch and make sure they can bounce from their slower economy. When we look at the USDA numbers, they said that the bean carryout for this year is 475, and most people are kind of using that number. For corn, 1910. Again, most people are using that number in the government. Wheat number is 1014 for 19 and 20, and most people think that, okay, that's the number that we have to trade. As far as 2021, people kind of start sticking their necks out as far as what kind of acres, yield, production, and demand we're going to have next year. USDA is using a 530 bean carryout. Guesses were ranged from 550 to 670. In corn, the government's at 2735, and the range of guesses go from 2400 up to 3200. And I think the higher numbers has to do with maybe better crops and lower demand. And USDA's got a 920 wheat number. Guesses go from anywhere from 850 up to 1 billion bushels. And here again, the key there will be probably more than anything else, demand. Funds, right now we estimate the managed funds are short about 9,000 wheat, 125 corn, long about 50 beans. So last week they reduced their long in beans. They went short wheat and they added to their short position in corn. And right now, today, looking at South American weather, looking at the demand picture, I really don't see anything right now that would trigger the funds to cover their shorts in corn or stay long the bean market. A lot of people think that November beans will find support at $9 if we trade lower, something below $370 in D's corn, but there really isn't any reason right now for the market to rally over the recent resistance levels. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable and warm trading day.